Hello dear student, welcome again. I am Dr. Boraste from Department of Commerce at KTHM College Nasik. Today I am going to discuss with you the practical example number 8 of piecemeal distribution of cash, under which we will see how the liabilities are to be paid, and further we will discuss about if there is a current profit on the liability side. With this, if there is third party liability like any kind of tax which is to be paid to the government, and partners loan as well as any loan which is mortgage which is given taken on mortgage, we will see over here. In this example we will see another new thing, that is if any asset is sold in the market and for getting more money or more value, if any partner expend on that amount or that asset, at that time what will be the adjustment we have to see over here. So let us start our example number 8 of piecemeal distribution of cash. So here is the example number 8, that is practical example number 8 of piecemeal distribution of cash as per surplus capital method. You can take a screenshot of this example or you may write down it in your notebook for better understanding. So let us start with the example. First of all, I will discuss about the example. Then I will explain how to solve it by using surplus capital method. And finally, I will explain how to pay the cash to the liability holders in their due order, or that is as per the priority of payment. So first of all, you can see here. Here is the example which is given of a partnership firm. A, B, and C were in partnership, sharing profits and losses in the ratio of 2:1:1. They decided to dissolve the partnership firm on 31st December 2019, when their balance sheet was as follows. So you can see here the balance sheet where you can see the capital of A, B, and C. Profit and loss account is here. As I earlier discussed in earlier video, that if on the liability side, if there is a profit and loss or general reserve fund or reserve fund or current profit or any kind of reserve, so whatever it may be, it is a part and parcel of profit, so which is kept aside in every year from the profit. So the right on this amount is of Mr. A, B, and C, that is partners. So we have to distribute the general reserve and profit and loss account or reserve fund or whatever it may be. It should be distributed among the partners, as the real owner of this general reserve or reserve are partners. In the same way, if on the asset side there is a profit and loss account, that means in that particular year there is a loss. So in that case, the profit and loss account on the asset side, meaning it means that there is a loss. So loss should be bear by the partners. With this, there is another liability, that is property tax, creditors, siege loan that is partners loan, bank loan which is mortgage on the machinery. On the asset side, machinery is given furniture, car, data, stock. Cash is here 4,500, bills receivable. In this way, we have asset and liability of rupees 85,000. So now there are some adjustments. The firm was dissolved on 31st December 2019 and the assets realized as follows. So here is the balance sheet on 31st December 2019. On the same day, the firm was dissolved. That is, firm means partnership firm was dissolved on same day. So after the dissolution, the assets were realized gradually, means step by step, not in one stroke. So on the January, asset of rupees 6,000 realized, on February 7,500, on March 5,000, on April 15,000, and in May 17,500. So in this month, he got an realization of rupees 6,700, 5,000, 15,000, and 17,500. So here is the example, and after that there is some adjustment. The cash should be distributed on the last day of each month. Means what? Our first realization is on January 6,000, whatever the date may be. but we have to distribute the cash on the last day, that is 31st January. In case of February, the last date is 29th February, as 2020 is a leap year and there are 29 days in February. So last day of February is 29th February. After that, 31st March, 30th April and 30th May. So another adjustment is there. Machinery was sold by bank for rupees 12,500 only. Here you can see the value of machinery is 25,000 and machinery is given on a mortgage to the bank for getting a loan. So the bank loan was 15,000, machinery's price was 25,000 and bank sold the machinery for rupees 12,500. That means for getting 15,000, bank sell that machinery for rupees 12,500. It simply means that bank loan is still payable. Means 15,000 was a liability, bank recover their 12,500, still 2,500 of bank loan is payable. We will see how it will be reflect in priority of payment. Later on we will discuss on that. Now here you can see Mr. C paid rupees 1,500 for repairing of car for more return. Means what? Here you can see the motor car or car 20,000. Okay. So when partnership firm want to sell that motor car in the market, it should get more return. For that, Mr. C expends some money for its repairing. And after the repairing of that car, the amount is realized more. For that, Mr. C expend rupees 1,500 for repairing of that motor car. That means it is called as realization expense. For getting more realization, Mr. C paid rupees 1,500 for repairing of that particular car. Okay. Prepare statement showing distribution of cash as per surplus capital method. Now this is the example and we have to solve it as per surplus capital method. So you can see here surplus capital. First of all, we have to find out this absolute surplus of partner. So let us see surplus capital means what. In the surplus capital, we have to prepare a statement of surplus capital where there are 5 columns. You have to draw serial number, particulars, capital in rupees, that is A, B and C. So 3 column for partners, 1 column for particulars and 1 column for serial number. Particular column should be bigger in a size comparative to partners, capital and serial number. So first step is you have to put the balances from balance sheet. So here you can see the balances of partners capital. That is A's capital is 19,000, B's capital is 19,500 and C's capital is 14,500. So here you have to mention, you have to put down all the balances. So 19,000, 19,500 and 14,500, it is a capital balances as per balance sheet. After that, if there is any reserve, any profit and loss, any reserve fund, any general reserve fund, any current year profit or any kind of reserve which is owned by the partners, it should be added in the partners capital. Here we have a profit and loss account. I have mentioned here some another name or another reserve for your reference, but here only one example is capital account. So sorry, profit and loss account. So profit and loss account we have 2,000. That means current year profit is of rupees 2,000. So we have to distribute the profit in their profit sharing ratio. What is profit sharing ratio? It is 2:1:1. And the owner of profit and loss account means current year profits are these 3 partners. So we have to distribute 2,000 between 3 partners. So here add profit and loss account. Amount is rupees 2,000, that is distributed among the partners. So here you can solve it. So 2,000 is distributed in A, B and C in the ratio of 2:1:1. That means into 2. That means multiply by 2, divide by 4. 2 plus 1 plus 1, that is 4. So Mr. A will get 1,000. Here you can see 1,000. In the same way, 2,000 1 share, that is equal to 2,000 into 1 divided by 4. Mr. B will get 500 and same amount will be received by Mr. C, that is 500. So here the distribution is 1,000 to Mr. A, 1,500 to Mr. B and 500 to Mr. C. So after adding the profit and loss account or general reserve or reserve fund or any kind of reserve, there is a adjusted capital. Adjusted capital is what? Capital plus profit and loss or general reserve or reserve fund or whatever it may be. So 19,000 plus 1 equal to 20,000, 90,500 plus 500, 20,000 and 14,500 plus 500 equal to 15,000. So we have to find out the unit capital. What is unit capital? Unit capital is nothing but adjusted capital or capital, original capital, whichever is higher. Here we have adjusted capital. So adjusted capital divided by profit sharing ratio, it will be unit capital. So you have to mention the profit sharing ratio again here, that is 2 is to 1 is to 1. So you can see here 2 is to 1 is to 1. Then you can calculate unit capital or unit value. How you will calculate over here? C divided by D. C means C row divided by D row. So here C row is A's capital 20,000 in the D row, and C column the profit sharing ratio is 2. So 20,000 divided by 2, answer will be 10,000. In the same way 20,000 divided by 1, answer is 20,000, and 15,000 divided by 1, answer will be 15,000. Out of these three unit capital values, that means for a one share, Mr. C gives 15,000 to partnership firm. For one share, Mr. B gives 20,000 to partnership firm. And for one share, Mr. A gives 10,000 to partnership firm. So for one share, Mr. A gives 10,000. For two shares, he gives 20,000. For one share, Mr. B gives 20,000. And for one share, Mr. C gives 15,000. So here you have to consider the least amount. Which is the least amount? 10,000, 20,000 or 15,000? Very good. 10,000 is the least amount, that is less amount or a small amount. So here you have to consider that amount as a base capital. So calculating proportionate capital, we have to consider one least amount as a base capital out of these three partners. So here we have a 10,000 as a base capital. So the next step is proportionate capital. So how you can calculate proportionate capital? Very simple. Base capital into profit sharing ratio. So here we have a base capital of rupees 10,000 and profit sharing ratio is 2. So 10,000 into 2, answer will be 20,000. 10,000 into 1, answer will be 10,000. And 10,000 into 1, again answer will 10,000. Here simply means that you have to multiply the base capital by the concerned partner's profit sharing ratio. So here 10 into 2, 20, 10 into 1, 10, and 10 into 1 again 10. So we got proportionate capital, we have adjusted capital, that means we can calculate surplus capital. So how you will calculate surplus capital? It's a very simple. Adjusted capital minus proportionate capital. So here 20,000 minus 20,000, answer will be 0. So you can see here surplus capital means what? Adjusted capital minus surplus capital, that is C row minus F row. Here C row is adjusted capital and F row is proportionate capital. So 20,000 minus 20,000, answer is 0. 20,000 minus 10,000, answer is 10,000. Very simple. You can use calculator. Even calculator is allowed for exam also. So don't worry about that. Examples are very easy, but you have to use the calculator as it being a practice while solving the example for error-free calculations. So again, in case of C, 15,000 minus 10, answer will be 5,000. So we got here surplus capital of Mr. B 10,000 and of Mr. C 5,000. We have to find out absolute surplus. Here we got a surplus of A, B and C. So there are two persons capital is excess, but we have to find out one partner who provide an extra capital for the partnership firm. So again all these steps will be repeated. So we have to again mention profit sharing ratio, then unit capital and proportionate capital. So in the next step, again the step will be revised and repeated. profit sharing ratio, that is 2:1. So here the column of A is nil, so we are not mentioning any kind of ratios or calculation for the case of Mr. A. So here is the only B and C, 1:1. Next step is unit capital. So unit capital is G divided by H, that is surplus capital divided by profit sharing ratio. So 10,000 divided by 1, answer will be 10,000, and 5,000 divided by 1, answer will be 5,000. You can calculate here, equal to 10,000 divided by 1. It's a very simple calculation. 10,000 divided by 1, answer will be same. So Mr. B's unit capital is 10,000 and Mr. C's unit capital is 5,000. Very good. Now you have to calculate, find out the least amount. You can find out here two amounts are given. 10,000 is capital of B, unit capital of B, and 5,000 is unit capital of C. So 5,000 is the least amount, so it will be considered as base capital. The next step is proportionate capital. Very good. So proportionate capital means what? Base into profit sharing ratio. So 5,000 into 1, 5,000, 5,000 into 1, 5,000. So next step is proportionate capital. You can see here proportionate capital, base into PSR. 5,000 is a base and PSR is profit sharing ratio. 5,000 into 1, 5,000, 5,000 into 1, 5,000 in case of B and C. The next step is absolute surplus capital. So here absolute surplus capital, how you will calculate? G minus J. G means surplus capital and J means proportionate capital. So surplus capital minus proportionate capital. In case of Mr. B, surplus capital was 10,000 and his proportionate capital is 5,000. So 10,000 minus 5,000 amount will be 5,000 and 5,000 minus 5,000 amount will be 0. In this way you can calculate the surplus capital. Here we got the surplus of Mr. B, that is absolute surplus of Mr. B, that is 5,000. So whenever we will pay an amount to the partners A, B or C, at that time first of all we have to consider Mr. B first. That is B will get 5,000 in the first step, then B and C will get 10,000 and 5,000, but here Mr. B is getting 10,000. Out of 10,000 he is already received here 5,000. So in this step he will receive 5,000. So it's a very simple statement of surplus capital. I think all of you understand this statement of surplus capital. If not, in next example I will also again discuss about how to calculate surplus capital. Okay, or you can see this video by putting back forwarding, or we can say rewinding it, rewinding the video. Okay, now we have to prepare a priority of payment. Priority of payment means what? We have a liability of capital, that is A, B and C. With this we have a property tax, creditors, C's loan and bank loan. Out of these four liability, which liability should have a priority? That means to whom we have to pay first, or a person or a liability holder who have a right to get money first compared to other liability holder. So it is called as priority of payment. Here is the priority of payment. First of all we have to pay, or we have to expend the amount that is for repairing of car. As I earlier mentioned while explaining the example, Mr. C paid rupees 1,500 for repairing of car for more return, that is called as realization expenses. So realization expenses will be 1,500. First number or first priority is of in case of realization expenses, that is car expenses or car repairing expenses. After the car repairing expenses we have a liability of property tax, creditors, C's loan and bank loan. So here you have to pay third party. In the third party, first of all you have to pay preferential liability. As I earlier said in the second video of piecemeal distribution of cash introduction part, where I mentioned how to calculate or to whom we have to pay first. So preferential liabilities includes property tax or any kind of government dues. So here we have a property tax of rupees 2000. You can see here property tax of rupees 2000. So we have to pay property tax, that is preferential liability under third party liability property tax. So after payment of 1500 for repairing of car expenses, then we have to pay property tax on the second number. After the property tax payment, we have some unsecured liability, that is creditors and bank loan. So these are third party liability but unsecured. So how you can say unsecured, even though bank loan is 15,000 and here bank loan is 15,000, but out of this 15,000, bank already get 12,500 in this step. That means only 2,500 is unsecured. Bank loan was fully secured for rupees 15,000, but after the dissolution of partnership firm, bank sell the machinery in the market and received rupees 12,500. That means 15,000 minus 12,500, balance amount is 2,500. It is unsecured. It automatically becomes unsecured liability. So here we have to pay only 2,500, that is bank loan which is unsecured, and the ratio of these liability holders will be, the ratio of this liability holder will be 3:1. That means in under unsecured liabilities we have to pay creditor 7,500 and bank loan 2,500. Why bank loan 2,500? As I earlier discussed that bank loan was 15,000 but bank recovered rupees 12,500. That means a security against the mortgage of machinery, bank recovered 12,500 and 2,500 becomes automatically unsecured creditor. So here in this step we must have 10,000. If we don't have 10,000, at that time we have to use the pro rata or ratio of this liability, that is 7,500 is to 2,500. The answer will be, you can use the table of 25. 25 ones are 25, 25 2s are 50 and 25 3s are 75. So 3s and 25 ones are 25. So 3:1. Here you can see the ratio of this liability, that is 7,500 is to 2,500, that is 3:1. So in this ratio we have to pay the liability, that is creditors and bank loan, that is unsecured liability. After this payment we have another liability, that is Mr. C's loan. C is a partner, that is partner's loan. Here in the next step we have to pay C's loan, that is 5,500, that is partner's loan. After the partner's loan we have to pay the absolute surplus of Mr. B. You can see here the absolute surplus of Mr. B, that is 5,000. So the next number is Mr. B absolute surplus. Then we can pay, or we have to pay surplus capital of Mr. B 10,000 and Mr. C 5,000. But here you can see the payment is 10,000 of B and 5,000 of C. But out of this 10,000, Mr. B is already received rupees 5,000 in earlier step, that is absolute surplus capital. So here he will receive only 5,000 and Mr. C will receive same amount as he is not received any kind of amount in earlier stage. So surplus is 10,000 of B. He already received 5,000 as the absolute surplus. That means actually he will receive only 5,000 in the next step, that is payment while receiving surplus capital. So again, if we don't have a 10,000 in this stage, if we don't have 10,000, at that time we have to use the ratio, that is 1:1. Okay. After the payment of surplus, we have to pay all the amount to all the partners in profit sharing ratio. But it is only in case we have an money in our hand, otherwise it is not possible. Here you can see the note number 1, that is calculation of bank loan. Machinery is mortgaged by the bank, hence it is sold by the bank for rupees 12,500 and the remaining amount rupees 2,500 is unpaid. So bank loan is 15,000, bank recover from sale of machinery, that is 12,500 and unpaid amount is 2,500. So while uh, calculating the surplus capital statement, we have to consider that bank loan amount is not, we don't have to pay 15,000 as bank already recovered rupees 12,500. So we have to consider only 2,500 as the unpaid amount of bank loan. So with this, we have to start the surplus statement showing piecemeal distribution of cash. So here you can see the statement of piecemeal distribution of cash as per quotient method or surplus capital method, or there are various nicknames. For this you have to calculate, you have to draw a column of debt, then particulars, then cash, then total liabilities. It is additional column. In various book you can see the total liability column is not mentioned, but from the solution and accuracy point of view, you have to prepare it, and why it is important. At the end of this video I will explain how the total liability column helps you in each and every step. Then property tax, then creditors, bank loan, seize loan, and capital. How you can draw this column and sequence of this column? You have to consider the priority of payment. So first one, you have to pay prior property tax. So here you can see, after the payment of repairing expenses of car, that is realization expenses, you have to pay a property tax. So first column will be property tax. It should be over here, property tax. After that, creditors and bank loan column should be there. So we have here creditors and bank loans column, and after these two columns we have to prepare a partner's loan column. That is only one partner who gives the loan to the partnership firm, that is C's loan amount we will see later on. Then the final amount, that is partner, all partners, so that is capital. So we have prepare a partner's capital column, that is A, B and C. Okay, let us move towards the solution. After this preparation, we have to mention the balances as per balance sheet which are given in the balance sheet. So here it is the balance sheet. So as per this balance sheet, you have to mention all the liabilities. So first one is your cash. In this balance sheet, you have a cash of rupees 4,500. So you have to mention cash 4,500. Total liability is nothing but total of all these liabilities. So we will calculate this liability later on. So, or you can calculate it here also. So here property tax, the first liability or third party liability is property tax. So first column is property tax, that is 2,000. Creditors is of rupees 7,500. Here is the creditors of rupees 7,500. Then C's loan is 5,500, but the number of C's loan is latter compared to, or priority of C's loan is less compared to bank loan. So we will prepare here bank loan. So bank loan is 2,500. As I earlier mentioned that you have to calculate the you have to pay only 2,500 as a bank loan, as already bank recovered 12,500 out of 15,000. So we just put here only 2,500. Then C's loan, that is partner's loan. Here is the C's loan 5,500. After that, we have to mention all the capitals. Capital of A 19,000, B's capital is 19,500, and C's capital is 14,000. So here is the capital. So the total of these all 2000 plus 7500 plus 2500 equal to 12,000 plus 5500, that is 17,500, and plus these three capitals, the total will be 70,500. So here we can calculate the sum of what, sum of these all columns, that is sum of all liabilities equal to 70,500. So when you will solve this example with the solution, you have to cross check with your liability and total unpaid liability. After that, we have profit and loss account or general reserve or reserve fund or only reserve or current year profit or whatever it may be. We have to add that profit. So add profit and loss account, that is 2,000. Again liability will increase by 2,000 because we are adding that amount in partner's capital. So 19,000 plus 1 20,000, balance will be 20,000. Then 19,000 plus, sorry, 19,500 plus 500, 20,000, and 14,500 plus 500 equal to 15,000. Already we have calculated that over here. So I'm not explaining more over here. It's very simple how to distribute the 2,000 in the profit sharing ratio among A, B and C. So we have a balances of rupees cash of rupees 4,500, Total liability is 72,500. Property tax 2,000. Creditors 7,500. Bank loan 2,500. Seized loan 5,500. And capital of A, B, and C 2020 and 15,000. Okay. Now go to the priority of payment. So in the priority of payment, first payment should be made to the to Mr. C, or we can say a realization expenses or repairing expenses of car. So here less paid to Mr. C or paid for car repairing, that is 1,500 amount cash will be reduced, and our cash in our hand will be reduced, and it will be now 3,000. So we have a 3,000. Our next priority of payment is property tax. Easily we can pay property tax because we have 3,000 and we have to pay 2,000 only. So less property tax, cash will be reduced by 2,000, and total liability also will be reduced by 2,000. With this, property tax also will be reduced by 2,000. After the payment of property tax, our property tax balance will be nil, 0. Total liability means 72,500 minus 2,000. Balance total liability, still we have to pay 70,500, and balance cash in our hand is rupees 1,000. Our first payment is finished. Now we have to pay next payment, that is payment to creditors and bank loan. If we don't have 10,000 at that time, we have to calculate the payment in the ratio of 3:1, that is 7,500 into is to 2,500. So here we have 1,000 only. That means we cannot pay all the amounts to creditors and bank loan. Means we have to distribute this 1,000 in the ratio of 3:1. So less paid to creditors and bank loan in the ratio of 3:1. So cash will be reduced by 1,000. Total liability again will be reduced by 1,000. Mr. A will get 750. How it is calculated? It's very simple. 1,000 into 3 divided by 4. Here you can see 1,000 into 3 divided by 4. That means 3 plus 1, total is 4. So out of 4 part or out of 4 share, Mr. Creditors will get 3. So 1,000 into 3 divided by 4, amount is 750, and balance 250, or we can calculate over here, equal to 1,000 into 1 divided by 4. That means bank loan will receive 250. After the payment of creditors and bank loan, that is 750 and 250, we have a balance. Balance of cash is 0. That means we don't have a cash in our hand. Total liability, still we have to pay 69,500. Creditors, still we have to pay 6,750, and bank loan is payable 2,250. Now we don't have a cash, that means we can call, or we have to call, the first realization which is made in January, that is of rupees 6,000. So realization number 1, as mentioned in the problem, that the cash should be distributed on the last day of each month. So we will put here the date of last day, that is in the January, that is 31st January. First realization is of rupees 6,000. Okay. Now we have a 6,000, that is our first realization. We take that amount from first realization. So 6,000 we have. After getting 6,000, we have to pay creditors and bank loan. In the earlier step, the payment of creditors and bank loan was 10,000. Here it is the payable amount. We already paid 1,000 to them. Still we have to pay 9,000 to creditors and bank loan. But we have 6,000. That means total amount will be will merge under the creditors and bank loan. So less paid to creditors and bank loan in the ratio of 3:1. So cash will be reduced by 6,000. Total liability will be reduced by 6,000. Mr. A, creditors will get 4,500. That is 6,000 into 3 divided by 4. Creditors will get 4,500, and bank loan will get, out of 6,000, bank loan will receive only one share, that is into 1, that is multiply by 1 divided by 4, that is 1,500. So total is 4,500 plus 1,500 equal to 6,000. That means we are on the right path, that is 6,000 is distributed to creditors and bank loan. After the payment of first realization, total amount 6,000 to creditors and bank loan, Still we have a balance of cash in our hand is 0 and total liability is 63,500, but we have to pay, still we have to pay 2,250 to creditors and 750 to bank loan. Now we have to call second realization. So second realization is on February, that is 7,500. So here is the second realization, that is 7,500. Now listen, in the first step we paid to creditors and bank loan 1,000. In the second step we paid 6,000. That means we have already paid 7,000 to creditors and bank loan. Now we have to pay 3,000 to creditors and bank loan because the total payment of creditors and bank loan was 10,000. So in the second realization, after getting the second realization, we will pay 3,000 to creditors and bank loan. Less paid to creditors and bank loan 3:1. So 3,000 cash will be reduced, 3,000 total liability will be reduced. Mr. Creditors will get 2,250 and bank loan will receive 750. That is 3,000 amount will be received by total 3,000 amount will be received by creditors and bank loan. After the payment of 3,000, it simply means we have paid 10,000 to the creditors and bank loan. So 1,000 here on the 1st January, after 6,000 on 31st, then we have paid here the amount of rupees 3,000. That means total amount 10,000 is being paid to the creditors and bank loan. After that, calculate the balance. So you can calculate the balance by subtracting the amount, that is 7,500 minus 3,000, 4,500, 63,000 was total liability. 3,000 total liability reduced by 3,000 and balance total liability 60,500. So this is the unpaid liability 60,500. As I earlier mentioned, total liability columns work is what? Still we have to pay 60,500. We have already paid creditors and bank loan. That means we have to pay C's loan and capital. Here is the balance: 5,500 of Mr. C, 20,000 of Mr. A, B and C, 20, 20 and 15,000. That means 20,000 plus 20,000 plus 15,000, 20 plus 20, 40, 40 plus 15, 55 plus 5,500. Still we have to pay 60,500. Here you can see the total 60,500 and here our total liability is unpaid 60,500. That means we are on the correct path. The next payment is C's loan, that is partner's loan. So what is the amount of partner's loan? It is 5,500 and we have only 4,500. So we have to pay 4,500 to total amount to C's loan. So less paid to C's loan 4,500, total liability will be reduced by 4,500 and Mr. C as a loan will be received by 4,500. Still we have to pay 1,000 to Mr. C's loan and our total liability is balance of rupees 56,000. Now our cash is finished, so we have to call our next realization, that is realization number 3, which is in March of rupees 5,000. So third realization on 31st March of rupees 5,000. Our earliest stage amount payable is rupees 1,000. So we will pay first of all less paid to C's loan, that is 1,000. Total liability will be reduced by 1,000 and C's loan will be reduced by 1,000. That means after the subtraction of balance payable to C, his amount is nil. Total liability still we have to pay 55,000, that is 56 minus 1, 55,000 and 5,000 cash was in our hand, 1,000 paid to C. So already after the payment of C, 1,000 amount is in our hand is 4,000. Okay, now we paid the partner's loan. Our next liability or next priority is absolute surplus of Mr. B, that is 5,000. So here 5,000, but we don't have a 5,000, we have only 4,000. So we will distribute 4,000 totally to Mr. B as an absolute surplus. So in the particulars column, less paid to Mr. B, that is absolute surplus. Total cash will be reduced by 4,000, total liability will be reduced by 4,000 and Mr. B only write down in the column of Mr. B only, that is 4,000. After the payment of 4,000 to Mr. B as an absolute surplus, we have a balance of cash is 0. We have a total liability still payable, that is 51,000 and Mr. B's capital is 16,000. But keep it in mind, in this stage we have to pay 5,000 to Mr. B. That means we have paid here in the step 4,000, still we have to pay 1,000, keep it in mind. Now we finished our cash as it paid to the all liability holders. So we have to call our next realization, that is realization number 4 in the April month, that is 15,000. So realization number 4, fourth realization on 30th April, 15,000. First of all, we have to pay 1,000 as an absolute surplus. As it was paid only 4,000, now still we have to pay 1,000 to Mr. B as an absolute surplus. So let's pay to Mr. B as an absolute surplus. Cash will be reduced by 1,000, total liability will be reduced by 1,000, and Mr. B will receive 1,000. Okay. Now we have a capital balance of Mr. B is 15,000. Still we have to pay 15,000 to Mr. B. And we have a total liability of unpaid liability 50,000, and total cash in our hand is 14,000. After the payment of absolute surplus, in the priority table or in the priority list, we have to pay Mr. B and Mr. C 5,000, 5,000 each or respectively. As I earlier mentioned, in the surplus statement, in the surplus stage, we have to pay 10,000 to Mr. B and 5,000 to Mr. C. But we have already paid 5,000 to Mr. B, so here you will get only 5,000. Here you can see, out of 10,000, Mr. B is received 5,000 in the earlier stage. So in this stage, in the surplus stage, he will receive only 5,000. So 5,000 to B and 5,000 to C. If we don't have that much amount, we will use the ratio, that is 1:1. So here we have an amount of rupees 14,000 and we have to pay 10,000, that is 5,000 to B and 5,000 to C. That means we have a sufficient amount. So there is no need to calculate any kind of ratio. But you can mention here less paid to Mr. B and C in the profit sharing ratio, or total we have to pay, we can pay that we have a total amount. So 10,000 will be reduced from the cash, 10,000 will be reduced from total liability. Mr. B will receive 5,000 and Mr. C will receive 5,000. Okay, now we have to calculate the balance. So in the next line, balance, our cash balance is 4,000, total liability is 40,000. Still we have to pay 10,000 to Mr. B and 10,000 to Mr. C. With this we have to pay 20,000 to Mr. A, but he doesn't have his number or his priority, so we are going to pay in the next step. Okay, now we have 4,000. Our next liability or next priority is all partners in profit sharing ratio. So all partners will receive the balance amount in profit sharing ratio, that is 2:1. So here less paid to Mr. A, B and C in the profit sharing ratio 2:1:1. So 4,000 cash will be reduced, total liability will be reduced by 4,000, and 50%, that is 2 share will be received by Mr. A and 1 share will be received by Mr. B and 1 share will be received by Mr. C. The calculation is 2,000, 1,000 and 1,000. After that we have to calculate the balance. Cash is 0, total liability is 36,000, that is 40,000 minus 4,000, 36,000. Still we have to pay 18,000 to Mr. A, as his capital was unpaid 20,000 and he get here 2,000, so 18,000 is payable to him. Mr. B's capital is still payable 9,000 and Mr. C's capital is also 9,000. Now we don't have any kind of realization or cash, so our last realization, that is on 31st May of rupees 17,500. So on 31st May, fifth and final realization of rupees 17,500. As I earlier mentioned, all the payments are made, that means all liabilities are finished and we have to pay only to the partners, that is in their profit sharing ratio. So less paid to A, B and C in the ratio of 2:1:1. So total cash will be reduced by 17,500. Again cash balance will be nil. Total liability will be reduced by 17,500 and Mr. A will receive 2 share. That means out of 17,500, okay, now I am putting over here, out of 17,500 he is going to receive 2 shares out of 4 shares, so that is 8,750. Mr. C 1 share, and so Mr. B and C both will receive 1 share. That means total amount of rupees 17,500 is distributed among the partners, that is in the ratio of 2 is to 1 is to 1. Okay. After the payment of this last realization, still we have an amount of rupees 18,500 in the total liability column, that is unpaid amount or we can say a realization loss. As I earlier mentioned, total liability column is more important while cross-checking your answer, or you can check your calculation in each and every step that you are going on right path or not. Here you have to pay 18,500. That means this is unpaid liability, and you can calculate the total of these three columns, that is Mr. A's unpaid capital, Mr. B's unpaid capital, and Mr. C's unpaid capital. The balance is 9,250. How it comes? 18,000 minus 8,750, 9,000 minus 4,375, and 9,000 minus 4,375. So 4,625 of B and C, and 9,250 is of A. So the total is 18,500. 9,250 plus 4,625 plus 4,625. The total is 18,500. It simply means that our example is correct. That means our solution is correct, and the realization loss is 18,500. So in this way, you can calculate the surplus capital statement, and you can find out the realization loss. So with this I would like to say thank you very much. In the next video we will learn more liability pattern and more payment on priority basis. With this I would like to say thank you very much.